Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, January 13th, 2025. It's 9:49 a.m. Eastern Time, and I wanted to get one out early today and share my thoughts on where I see the best opportunities right now, today, this week, near term. So I'll try to, as I usually do, speak to near term, intermediate term, that kind of thing. Starting out here, this is QQQ. I'm sorry, NQ. Jumped over to a 6-month charts. So that's 120-minute candles. We still have pretty clear and pretty strong positive divergence. And so we have this near-term downtrend. We've had some long-term and intermediate term, more intermediate term sell signals, as well as that bearish engulfing on the weekly. But again, I still think there's a good chance for not just a balance, but a potentially explosive short covering rally here. Hinges largely, as I said this morning, on Treasuries breaking out. But I think there's a very good chance that's going to happen today or tomorrow. And that's where, if you are an active trader, got to pounce on it. And we could, easily see this market rock up 3-5% in a day or two. So this is NQ. There's still support. This is again a 120-minute chart, as I told you, 2-hour candles. That's previous reaction lows there. So we broke down. I covered all this quite a bit. Sell signals here. That was support that I mentioned last week is a pretty significant level. And I even said, once that broke, then I thought that would be the next sell signal up the next leg down. However, as I often say, the charts are dynamic, and therefore so is my analysis. Meaning charts change day after day as time goes on, minute by minute. And so what you have now is an even bigger divergent low. We're quite oversold. We have Treasury bonds setting up. I'm going to get to all that. So here it is in a nutshell. Where I see the opportunities today. Long equity markets, especially if NQ can pop back above here. I'll cover QQQ in a second for you ETF traders. That'll be a whipsaw if so. Let me just drop it down to a 60-minute chart, show you the hourly candles. Let's see, I think I had it on a different board. So let me go back and leave it on that 6-month there. I've got this 15-minute chart here. Let me see if I have it marked up on the 60-minute here. No, but it's the same thing. It's the same divergence you see on the 2-hour chart right there. It's pretty big divergence. And remember, I always say divergence is not a buy signal, it's a condition. But again, I think this is a textbook a stop blowout right there. And so it's not a big if, it's just an if to watch and how to react. Cover back above there, we should pop higher. Now remember, so while you have NQ breaking down at the very same time, ES, which I showed you this morning, is at support. I'm looking. I've got a gazillion charts down here. You can't see off screen. Let me find ES for you. There it is. So this is the one I got out to you today. Very well defined. Support right here, support, or once broken, resistance. All these reactions help to define that. That's why I color coded that line yellow. It's a pretty significant level. Positive divergence, strong positive divergence. So in spite of the recent, selling, the Santa rally got checked. We never got that. We had just nothing but selling since the year started. And again, that was all priced in the charts. We were, highlighting these sell signals and reasons to be short. But again, I'm still pushing the longs, pressing them from last week, and going to, like I said, not only suspended my stops, but added to my longs today, even though we're below that support level I just showed you on NQ. And there's a comparable level on ES right there. So again, I highlighted this being support this morning, but you can see this is also a very good, or was a good support level. And I think if and when, again, it's a conditional stuff, guys. If it doesn't happen, then we don't get the rally. But if we can pop above there, this whole thing, as well as that level I just circled on NQ, will be what we call a whipsaw, false breakdown, bear trap, all one and the same. So what happens is short sellers come in, they see that break, they short, longs capitulate on their, stop out, shakes out the weak-handed longs, and then you have a new, at least near-term dynamic in the market that could pop us up here. Where to? I could easily see a ES going up to this downtrend line right there, And here, let me get to the ETFs for those of you who trade ETFs. So this is the setup I shared with you last week. And obviously, I just told you I'm suspending stops. So stops, as said last week, on a 60-minute close below. Now, first candle of the day is always a 30-minute candle. So we're not going to have a full 60-minute candle till 11 o'clock. Look, they're either going to come in and buy right now, which I believe they are, hence the reason that I added in anticipation of this whole false breakdown thing, or not. And if they don't, then, next support's down here, but we're deeply oversold. So comfortable right now holding, see now the day closes. That's just me personally. There it is. So I think we'll close back up here, especially by the 11 a.m. candle. And so this is still, for an active trader. And where to again, you have these downtrend lines. I just showed you one on SPY or ES. There's one on QQQ. And that's it. Again, I think we'd be looking at least a 3 to 5% rally if these things play out. Again, that would be a pretty conservative number there. That's right now would be about 4% to get us up to the downtrend line right there. So let me do this quickly, get through everything I want to get through. Remember that, it's a mixed bag. You do have sell signals longer term. You've got, this is IWM, small caps. Primary trend line's broken there. I don't know what just happened. Something changed in my time frame. There it is. It should be a daily chart. There it is, daily right there. So daily chart, breakdown right there. Solid sell signal. However, as I pointed out last week, you've got those bears will call the pesky little 200-day moving averages. Bulls like them. In a bull trend, it's simple stuff. You want to be mechanical, buy pullbacks to the 200s till it stops working. When the 200s go, clearly go, then we, short rallies back to the 200s. Right now, this is the first test of the 200-day moving averages since that one almost hit him there. That one did hit him. That one did hit him. And that's when we first regained him. So simple stuff, guys. A lot of reasons to be long today, and press it hard, press it fast. It's my thought here, because if you blink, I think this rally, like I said, it's potentially explosive short covering rally. All things should outperform NASDAQ 100, Bitcoin. I bought some Bitcoin this morning. And let me show you what else I have here. Oh, let me go in order here. So, okay, we'll get to Bitcoin. You can use the ETF. I shared it's been official short trade idea here based on the 60-minute chart. That goes over here. And we did just finally break that S1 level I've been waiting for. So you could say that's a sell signal. However, breakdowns that occur, just like breakouts that occur to new highs or, new highs with negative divergence and overbought conditions often fail. And breakdowns that occur with positive divergence and oversold conditions often fail as well. So therefore, despite what I might have said for the last few couple weeks, months, no, weeks, we've only had this one back here since December. Or November, I'm sorry, we entered that trade in November. I'm viewing not as a sell signal, but on watch for a whipsaw and likely get another thrust up in Bitcoin. And then, close those longs, recycle back in short, watch, rinse, repeat. And that goes, obviously to be long and bullish near-term Bitcoin would be long and bullish that micro strategy, which is and has been an active short trade on the site. We hit our first two targets. We short after this bearish engulfing candle. But if Bitcoin bounces, so will micro strategies. And look, if this all falls apart, if these levels I just showed you, support levels on SPY, ES, everything else, they don't play out, the Treasury bonds, whether they don't break out of the bullish falling wedges or they do, I'm going to get to that in 1 second, but then fail, then that's a whole nother thing. Something else is going on, something bigger. But as of now, let me segue into treasuries as well. Oh, and by the way, on on IWM, I didn't mean to just go through it quickly. Where to again? You hit the 200 days. It's a solid breakdown, so that is a sell signal. If the 200 days go and this market just craps out, then that's it. You got to flip back and react. You just either, if you are an active trader, you're active and nimble. Recognize that the bounce isn't going to materialize. 200 start to go, support on SPY, ES, NQ, all those levels start to go. You have two choices: either stop out of longs if you took any, on Friday or today, and or reverse into shorts. As of now, like I said, the case can be made bounce. And where to again? Back test. That'd be what I'd be looking for. There's an, IWM clearly broke down below the primary uptrend line. So it's not unreasonable to look for a back test if we do get a bounce here again, conditional on everything happening. I have various trend lines on QQQ. Let me try to show you right here. Well, we still see that divergence line. All I did is just extend it, but that was on the 60-minute chart. I already covered that. That was right here. What I want to show you are Treasury bonds, because this is where I already gave you the chart of ZB. I'll give you TLT now that the regular session's going. Still have big divergence here on the 60-minute time frame, positive divergence that is, and divergence is not a buy signal, but I'm going to show you TLT real quickly, but then we're going to look at IEF. IEF is the more important of the two. TLT is just my preferred trading proxy because of the juice. 30-year bond, the duration on TLT is longer. Duration is how much a percentage move in a bond relative to every 1% change in interest rate. So basically, longer term, longer maturity bonds have higher duration, means they move, they're more sensitive to changes in interest rates. So you watch the 10-year, this is what the market looks at, and that's a major reaction low. Everybody's looking at that low on IEF, and you can see IEF still, just like TLT, has strong positive divergence all the way out here on the daily chart. And it's everything I've been calling for a long time, that the bond vigilantes would come in and check this market. They would check the inflation trade, the rally in equities. Bond vigilantes have clearly showed up now with the Trump administration. Even if it was Kamala Harris coming in, they're both spenders. Nobody's going to argue that. You might have your favorite candidate, you may not like either of them, but very few, if you read up on the policies, they were both spendthrifts. So either way, we're destined to see this. It was priced into the charts. Now, again, so I've been longer term bearish on bonds, meaning expecting higher rates. However, it's just a tactical trade, and I've been talking about it for a couple of weeks, but the setup is continuing to build. Divergence gets bigger and bigger. There's IEF on the 60-minute chart. We go back to the zones that I've given since early last year. We're still, look where we are. If I turn off, well, you probably can't see it, but we're here smack towards the lower quadrant of my orange zone, exactly where we were back here. If you remember, this was in April, May. You can see right here. Turn off all the lines real quick. And so that's when, again, I warned of it back then. That's when the orange zones were created, and that it would have an effect on the stock market. But then we got down there. The market did have a correction when we got down in the orange zones, just like it's doing now. However, we're right where we were then, and let's look what happened to the stock market. So then Treasuries, the technicals played out. We covered our Treasury shorts. We went long back then. Why? We had positive divergence. And so what happened to the stock market? Let's remember right here, late April. You just go to QQQ. Oops, there it is. And here, let me turn off all the lines. There it is, late April. So this is, guys, this is simple stuff. It's not mere coincidence. The stock market started taking note as we entered the orange zone, but then that was it. Nothing goes down forever. Nothing goes up forever. Treasury bonds were, a bounce was likely. It was indicated in the charts with the positive divergences and everything else. And they did. So Treasury bonds rallied. That means interest rates fell. The stock market loved it. Remember, they don't care about the Fed anymore. Fed has absolutely and utterly lost control. I've highlighted that quite a bit recently via the, what's happened at the last several Fed meetings, with cut, and rates going the other way. Actually, it was TYX. I'm showing you there. So that's it. This is Fed cutting rates. First cut, second cut, third cut. Each time, not everybody, again, not us, but a lot of the majority thought long-term rates would go down, as they have in the past. And what happened is the opposite. Long-term rates keep going up, so that's the Fed losing control. Okay, so now that's well talked about. Everybody's now, I look at the headlines, and all they're talking about is what, we've been predicting now for a while, so it's played out. By the time you start reading about in the headlines, the bond vigilantes are showing up, the bond market's not happy about all the spending plans, and in tax cuts and all that blah blah blah. That's when that's when the Johnny come latelys are starting to short treasuries, and now is a good time again to be buying them, or again an indirect hedge to a equity short. That's been playing out very well as well, meaning if you're short QQQ, as I've said, and long treasury bonds, you're making as much or more on your QQQ shorts. But again, now would be a good time to cover and be long both equities, especially if the aforementioned sell signals happen, which was the recovery back above, right here, there, boom. See that recovery back above that level there, and the level I just gave you on ES. All right, what else do I have for you? I want to get this out quick. Things may move. Okay, so, and if you're doing, what I figured would be the best thing, selectively long and short the most bullish, long the most bullish stocks, sectors, commodities, whatever it is, and then short the most bearish. NVDA was laid out as a short right there the day of the bearish engulfing candle, right at the highs. So if you took that short, and again, it's a longer term short, or you can book profits here, because if the market bounces, so will NVIDIA. NVIDIA is still right at around those previous lows. You made 15% as an active trader. Time to reverse that one. If the market bounces, NVIDIA is going to most likely rally. SMCI highlighted that as a short here just about 2 weeks ago, not even. Right here, bounced back into this 38.20, said that was a really nice resistance. And again, if you took it, you made so far 23% in a week. Take that 23% right now, maybe consider that, and then wait for the bounce, get back in short when it's time, or go long, reverse it. Guys, it's simple. These risk assets, Bitcoins, SMCI, NVIDIA, they'll probably jump on quality most, overweight NVIDIA and things like that. And the other ones, Netflix, another one of my favorite shorts I've been highlighting recently. So far, breakdown there. It's also going down, but like everything, it's down 10% since the bearish rising wedge breakdown. Still has plenty of downside left in the coming months this year, but it's a matter of bounce. Where to? Well, look for everything bouncing back to resistance. If you want to game these bounces, you got a trend line there. It's minimum 4%, whatever. Or if you're an active trader, at the very least, lower your stops to protect profits. Where to? Depends on where you shorted. And GDX, I told you the other day, revised, gave you a new target at right here, and which we hit, and we were there at the time. So I said that good time to take some profits, probably pull back there. And if you did that, you were able to. We went long here, so you made a quick 9%, whatever, 9-10%. Turned around. As an active trader, you sidestep that 4% give back, but we're back to support. So this is a good time to re-enter. I just added a level here. I'm going to call it S1. And again, this is what we call swing trading. Swing these little rips and dips. And maybe a little uptrend line there as well. I'm not so crazy to jump in it now, because what's going to happen is gold. There's better. The risk assets right now are where to be today, I think, in this week. Gold may flounder around. GDX I'll probably buy. Again, it's that support. What else? Oh, yeah, no. Okay, so on Friday, got out big to me. The grains. Well, let's start with the ones that did break out. Wheat will follow almost certainly. Corn, beautiful breakout, guys. Took out the 200 days, took out that trading range I've been harping on for a long time. Kind of a pretty stacked right now in these ag commodities and the ag input stocks. I'm going to get to in 1 second. So that's a buy signal all day long unless it fails. A solid move back below there. Boom, breakout in corn, breakout in soybeans. Time to add to those. Well, the time was Friday when I highlighted the breakouts. They're up a little today, not much. Still have much. I'm looking at these as longer term trade ideas. And then wheat will most likely close the gap. It's been underperforming, rare underperformance of soybean and corn, especially corn. Wheat, corn tend to move together. So wheat's waiting to break out. And, you know, it's up 1.5% today. And these are ag commodities. Remember, you can put more into these than you do into, let's say, an SCMI long or short, or even a NVDA long or short, because these guys don't go up and down 10% in a day. It's kind of like a little bit more like trading Treasury bonds. They're a little more volatility than Treasuries, but what you do is you overweight those positions. And then, so as I've been saying now for months, once the grains start to run, you'll see the ag input stocks start to run. And that's certainly what happened. So this is not mere coincidence. I highlighted those breakouts on Friday on the grains. What's rocking today? The ag input stocks, which I've been bullish and long on for a while. See TVA, nice move up today, up 3.5%. NTR, one of my favorites. We already hit the first target. Remember, I've been highlighting these since back here. Bullish falling wedge breakout. We hit my first target there. Put in a marginal, still divergent low. As I've been highlighting, the charts are still very constructive. Today it broke out. I'm talking about a breakout of that downtrend line right there. So this is, to be very clear, a breakout, an objective long entry or add-on to an NTR long right there. Breakout above the downtrend line. We already hit T1, so at this point, that opens the door for a move up to T2. Whether we get another reaction at T1 or not, I wouldn't be looking to game reverse it there. I definitely wouldn't look to reverse it or even take profits. So just hold out for these bigger targets now, especially if the grains continue to rally. CF, another one. We hit my first target there. Remember, I gave you total two targets there. That's still the next target. Holding on this uptrend line, just needs to pop that previous high, and that should open the door to T2, especially if corn, wheat, soybeans continue to rally and their breakout sticks. Mosaic, MOS, it came just a hair shy of T1, so I don't consider it hit. We got rejected off the 200 days. Look, 200 days, 200 days, 200 days. Little false breakout above the 200s, but this is where it lost them. And so when it pops those 200 days, probably going to blast right on through my first target and head up to these other targets there. So there's Mosaic, ICL, just checking the boxes. I can't remember exactly where I highlighted. Started getting bullish on these guys back here. We already hit T1 and T2. We're about to hit T3. So again, I can't remember exactly. And there are multiple entries. I've been highlighting these guys for a while, but you know, you're up already about 40% on this one off that 377 support right there. FMC, ready to rock, big divergent low. Guys, it's birds of a feather thing. So again, not that I guarantee that the breakouts and the grains will stick, but they look good. And if they do stick, all I can tell you is these guys, I'm getting down to the lower price ones. I'm doing this here. The lower price ones have higher gain and loss potential. This is IPI, Intrepid Potash, AVD, big, look at AVD, big divergent low right there, positive divergence, nice downtrend line to pop, and price resistance, $5. If it takes out $5 plus its downtrend line, boom, boom, boom. What does that mean? If so, that's a 44% gain to the 662 target. Once it, when and if the gap is backfilled, you've got 72%. Maybe take the money and run at that point, or we'll see. Look how the sector is now. If the stock market, shits the bed, will these guys go up that much? It's possible, not likely if there's a complete meltdown in the market. But just keep in mind, one thing I like about these is these guys fly under the radar. They're not indexed. Most of these stocks are not components of the NASDAQ 100 or even the S&P 500, so they can march to their own drumbeat. Because what happens in a broad-based market sell-off, just like a broad-based rally, broad-based rally, all ships are lifted with a rising tide, and when the tide goes out, most things go down. Now that's due to the index funds. That's great when money flows are coming into the market, everything goes up. But that machine goes in reverse during corrections, and then you don't want to be in S&P 500 components and NASDAQ 100 components. But you can still make money on these little obscure, fly by under the radar type companies. And again, if the ag input or the agricultural commodities hold up. So let me stop it there, just get the video out to you guys. There's still plenty of work to be done. We haven't broken out in treasuries yet. And we may not. That's one thing about, a breakout. A setup is a setup. So on IEF, 10-year treasury bond, and the futures, I give you the charts this morning, you need to see these trend lines broken. Boom, pop the trend line, and that's most likely going to spark a short covering rally. If we get a short covering rally in treasuries, that means rates are falling, and the market's going to like that. And people are going to step in and buy Apple, even though Apple's below. Apple, recently triggered a longer term, more powerful sell signal, trading below the primary uptrend line, like I've covered right here, quite a bit. That's nothing but a beautiful sell signal. That's a trend line off the April lows right there. However, if again we get a relief rally in treasuries, they'll probably come in and buy risk on assets and Apple, and you could see a back test. And so while I maintain this sell signal, it's powerful. I think Apple's going a whole lot lower. If we do get let's say a back test, that could be 6-7% to back test there. But as of now, we have nothing but a sell signal. No buy signals, nothing like that. We do have some positive divergence here on the 60-minute chart by the skin of our teeth on Apple. Really, you can see here, if we go much lower, it's going to take out that divergence. But as of now, it's still there. I'm going to put a little level here. Why'd I do that? I can see resistance here, support right here, resistance there, gap right there. So it's mild support. And again, it's more about the NASDAQ 100 and S&P 500 either reversing today and taking back those recently broken support levels, which are now resistance just overhead, as well as treasury bonds. So simple stuff. Risk on or risk off. Right now, the market's been risk off since late December. And if we get a relief rally, which we will, again, oversold, we're just it doesn't appear that we're at that point of the market cratering yet. So looking for that one last, hurrah. Not last hurrah. I think the top's probably in. But just looking for a little bounce, relief, tradable rally. And then look to get back short at more objective levels on the market, the indexes, as well as some of those market-leading stocks and the crowd favorites like, SMCI, NVDA, Bitcoin, all that other good stuff. All right, guys, I'm going to wrap it up here to get the video out to you. We're still just kind of about where we opened today, so plenty of time. And you have the levels to watch and developments to watch for. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.